Good afternoon, ladies and gentlemen. Welcome to our first episode of Market Masters in the new year. And we are blessed to have a very fine gentleman who really needs no introduction. Mr. Samir Arora, founder for Helios Capital, joins us from Singapore. Mr. Arora is a very, very well-known investor in Indian markets and is able to time the market in a very fantastic fashion and explain the inexplicable. Namaste Samirji, a very warm welcome to you. Happy New Year. And what a way to start January. I think the market is saluting your presence on Market Masters with crossing 24,000 on the Nifty.
Thank you very much and Happy New Year to you, both of you, and to your audience. And if the market is going to welcome me like this, then every day put me down as one guest.
We will be more than
बस
blessed.
ये हमने लिख के रख लिया है समीर जी और and we will take and encash this rain check on a fairly regular basis. स्वागत है आपका. आप बताइए, how do you read sentiment on Dalal Street and what looks good after terrible 3 months?
So the big picture issue is this. Just before, is it an English program or an Hindi or both?
Samir sir, you can speak
बड़ी
in
मर्जी है जी,
both the
दोनों भाषाओं का
languages.
इस्तेमाल होगा.
Okay, English, let's say. So the big picture is that, people have been nervous about this market, saying that this is a good time to raise money and sit on cash, basically calling it a big bull run. And my point has been that if you see the previous 30 years, the big bull runs have ended with a massive run up first. So for example, in 1991, the market was up something like 60% and then it fell in 92. And similarly, in 1999, the market was up some 58-60%, and then also after a number of years, and then it fell in 2000, and similarly in 2007. अभी यहाँ पे क्या story था that last year, that is 24, the Nifty was up some 9%, and the 500 index, which is a true representation of the market, was up 15%. So these are actually the 9% is lower than our longer term average, which is about 12-13% for Nifty. And the Nifty 500 index was in line with the history. So that's why I never felt that India has gone into some wild zone. Maybe a few stocks have done and then those stocks can correct, we don't care. But if you look at aggregate market, it has given returns in line with the market in the past. Therefore, I said and say that we should be bullish in general, but the bullishness has to be lower, to expect lower returns than what may have happened in 23 and 24, because of large and mid and some small funds have gone up. Even our mutual fund went up some 26-27% in this year, 24. So वो इतना unreasonably high हो सकता है for the current year. But it still should do okay, and particularly if US के जो fears हैं, they don't come through, which is that Trump will be irrational, that Trump will put duties and tariffs around the world, that they will be super harsh on H-1 visas, that they will be too strong. I think India will not be negatively hit by US Trump policies.
Okay, very warm welcome yet again, Samir sir, and Happy New Year to you. And of course, like Shell said, we are noting that down and keeping that as a clip for all our viewers to see that you are going to be coming every other day. But jokes apart, what has been your New Year resolution this time around?
What is the
New Year resolution for you?
There is no new resolution because I was already doing all the right things, but they're not working on me, which is to not eat a lot of dessert and to take 10,000 steps, which I do every day. But somehow my weight is not reducing, but neither does it go up. So I'm okay. I'm otherwise a fit guy. And and I read books. So I am not going to say, I am going to this year do this. If I can have the energy to continue to do what I'm doing, I'm happy with that.
Are you going to invest in something which you have not invested in the past, like a crypto or a Bitcoin?
No, that doesn't need resolution. If it was worthy of investing, I would break any resolution if I had. but I don't understand crypto because I don't understand its use. So I don't know what is the end game in a crypto. Is it that it is a substitute for money in the sense of for transactions, which was the original thing, or is it a substitute for storage of money like gold? So I don't understand because people say, oh, this new crowd can buy crypto and for them it is gold. Why for them this is gold and why gold is not gold? Why do they need to have a new thing to call it gold? I don't understand crypto. I'm not buying it.
Right. And I think we start this conversation with a wonderful uh, background on crypto. It still doesn't make sense because there are no fundamentals, and you might just have rallies one after the other, but there is really no use for this asset if it indeed is. It is an asset. Samirji, what we'll do is we'll first look at the Helios AMC portfolio and then take conversations forward to some other sectors. What I see is that during October and November, you've basically creamed the rally that has happened in internet stocks, whether it's one Paytm, whether it's Zomato, whether it is Swiggy in which you entered. How do you see this space now? How do you defend this thesis on either the online providers of good quality food or even, how should I say, payment vehicles such as Paytm? There's one more listed called MobiKwik. Maybe you can comment on that one as well, sir.
So first thing is that I am not the fund manager of the mutual fund, and my portfolio here will be a bit different from the ones there, except that our research is common, so we broadly go along the same line. So ask me in general, not related to the mutual fund, but big picture, we like Zomato and Swiggy because of course food delivery, but also because of quick commerce, where basically these guys are the original guys who are doing it, and now maybe some people are copying. But I see on Twitter many people saying that we are going to remove the app for Zomato because they charge me extra for food. And I say, no, they are not charging you extra for food. They are charging you so that you don't have to go out in the AQR of 400 and for you to save from pollution and traffic jams and parking issues and road rage, and so that you can sit at home and also recover the money you paid for Netflix. Otherwise, you'll be keep roaming around to try and save 50, 80, 100 rupees that the Zomato guys charge you for delivering you food. But the other thing that has worked for them is the quick commerce, where currently the penetration is very, very low, even if 2, 3 more guys come in. And therefore, big picture, there are very few sectors in India where you can at least imagine for the next 2, 3 years a 30, 40% type growth on the top line. So it's not that the whole portfolio can be built around such high growth stocks, because they're also, you can say, not easy to justify in valuations otherwise, but they are a part of a mix. The mix has some steady compounders, slightly slower growth, but longer history, maybe like HDFC Bank and now maybe ICICI Bank, which has done well already for long. But on the other hand, you need a few percentage in these high growth, because this high growth also is in shortage right now in our market. So there'll be a place for this in everybody's portfolio. Your weight might depend on your aggression. So we have cumulatively in our offshore fund in Swiggy and Zomato and Paytm and PB Fintech, maybe together some 14, 15% kind, or maybe even less, 13, 15% type number. So you're not betting totally on it, but it is a sector which is growing very well, and you can imagine it doing well for a number of years.
Okay. You did take the name of ICICI Bank. That brings me to attention the HDFC Bank space that we've been discussing for far too long. Finally, were you happy after 4 years of nil returns? It started to move and fresh highs were being seen. Do you think it can continue to perform in the new year at least? Should it be a part of the core portfolio for the new investors who may not have had HDFC Bank thus far?
So for 25 years, I have 30 years, I have not 30, but whatever, maybe 28, 30 years, I've been holding the stock. And every time it has looked good for the next 2, 3 years, except in the last 4 years also, it looked okay to good and then it did not do well. But we have stuck with it because there is definite progress on the bottom line in terms of the merger with HDFC, which took longer than we thought in terms of coming together. But again, in a portfolio sense, where you want a little bit of stability, a little bit of quality and history, and you can see that the last 3, 4 years, this is one sector which is the private banks, but particularly HDFC Bank and Kotak, but not so much ICICI, have underperformed, but their earnings have continued to grow at some 10, 12, 15%. And even now we think that will happen. And currently for this year, even a 15% earnings growth will be quite valuable, considering that our consumer sector is not doing well. Most probably our auto sector will not do well, even though numbers today were like 1% better other than in Maruti. So therefore, I think a 15% high visibility earnings will be valuable. So it's still in nearly all our portfolios, number one or number two stock, and we will continue, yes.
Samirji, this last 3 months of downtrend from late September to almost end of December has made a lot of large caps juicier still. In any case, the rally in 22-23 was concentrated more on mid caps and small caps. Within the large cap space, is there anything that now catches more fancy for you?
So not only over the last 3 months, but generally in the last 5, 6 months, other than financial, which we always had. So you can't say that we have overly discovered them now. But IT sector, we increased our weightage. In June 22, we had gone to zero weight in IT in most of our portfolios. But from around the time when the Indian budget came and before that, the elections, after that, we sold off some of our PSUs and this oil and gas and even a little bit of defense because the government seemed to be in the budget distracted because of politics or whatever. And we then got into IT. And that IT over these 5, 6 months, we have added a little bit here and there every time. So now we may have maybe 14, 15% in pure IT. And then if you call these other companies which look like IT, but don't literally follow step to step, like Indigene or KPIT or Car Trade, which you can call platform or IT, you can call it whatever, then all these would be maybe then become 20% of our portfolio. So these are the new marginal large cap names, not these smaller ones, but I'm talking about the Infosys and Coforge and HCL Tech and a little bit of TCS. Now let's hope that when the results come, that they don't overly disappoint us and everybody else.
Okay, Samir sir, what about the auto space? I mean, December has been pretty good for some of the players in terms of sales, highest ever sales for Maruti, for Hyundai as well. But the space has been in a lot of trouble in 2024. There were a lot of issues. Finally, are things getting back into shape for the auto space? Is this the time to go big?
Well, we will never, more or less ever buy auto sector. We consider it a sector which has having too much trouble, so we are not going to buy it. If the stocks do well, good luck. But because we don't trust the sector in the sense that it's getting too much disruption. Even if you see the primary sales, that is the sales to the end customer, even in December versus the dispatches shown by all these big guys, there is no action. We don't like the sector from any angle, so we are not going to buy. I also, by the way, big picture believe, which is you can call it a positive or a negative for the sector, not about the stocks, is that India has to make peace with China. India has, overly restricted technology from China, thinking that as if Indian guys can do it themselves. But if you see in the world, the progress of China in EVs and even in solar is so much higher than the rest of the world that there is no point in us fighting with them on these issues. This is not security type issues. I think India should allow Chinese EV guys to come into India. Maybe obviously require them to have local partners and also put some rules on localization and do whatever. But to say that you can't dare come in, but our guys over 30 years will become like you, there is no way that even in 30 years they will become like China, because the Chinese guys would then have done more development. And how do we know that that is true? Because look at it, the Japanese guys are panicking and trying to merge to compete with China. The European guys are all closing plants, Volkswagen and all. And you can broadly in 5 minutes on YouTube see the progress or the range of vehicles in China and the features from Xiaomi to BYD to everybody else. What is the point of us fighting with them on these issues? We fight on whatever we want to fight, but some of it with localization, with a local partner, blah, 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 you let them in. And I think that it is logical. Now, government may not do it, but I think it's logical. I think that's another risk factor. Imagine if BYD landed up in India with similar to JSW, somebody big being a partner. That will be the end of the local, but it'll be good for India. I'm not saying that this will be some disadvantage or some loss to India. We have to be open about where you want to do deals and where you want to fight. Same thing in solar. There is no security issue. There is no
Samirji,
state secret in all these things. But we should let them in, and that helps our utility companies and our consumers in those sectors.
fair point. Samir sir, when you look at the Indian macro picture, there is a bit of a degradation that's happened over the last 6 months, whether it is the weakness of the rupee before Mr. Trump's taking oath in the US, or a dip in forex reserves, rising inflation, howsoever way you might want to put it. But two practical trades have emerged, which is the resurgence of IT and of course the pharma space. These have been your old world favorites also from the 1990s. How do you see this space now, and what do you think does 2025 hold for pharma and software?
So IT, as I told you, we have increased our weight and we are hoping, and now basically we went from near zero to like 15, 18%, depending on what all you put into the IT, this thing. Pharma also we have, but I would think that in pharma, particularly in the CDMO and others, and research oriented, the fact that currency has gone from 84 to 85 may not matter so much, unless you were into making generic where every cent mattered. But otherwise, both these sectors are good. But from a macroeconomic point of view, I think the government has overly tightened the economy in terms of spending, fiscal deficit, and interest rates. And also, tax rates are hurting. Although these rumors are there, I don't think very significant amount can be released in terms of cutting taxes. But at least directionally, they should at least acknowledge that longer term, 2 year, 3 year, we will cut some taxes, we will help the middle class and the taxpayer and all that. And generally, there has been this issue also that the consumers have taken too much loans to buy consumer durables and stuff like that. So these things are a bit of a drag on the economy, and somehow, somewhere, we have to create jobs. And other than this manufacturing, which is, these auto and all cannot create much jobs. These are all automated businesses mostly. You have to somehow focus extra hard on something, I don't know, let's say tourism or something. So they have to do something to get this economy going. Us buying one stock here or one stock there to say, okay, we will buy pharma or we'll buying IT is okay. But at a macro fund level or our business level or country level, you want the whole country to be doing well. and some parts are not doing well right.
Fair point right there, Samisa. The other spaces, your foreign friends have been kind of staying away from India for far too long now after that $60 billion of exodus that we saw in 2024. What are the conversations in the new year like? Are they liking India, or they have too much to really consider as better options even now?
So first thing is that your number is a bit wrong. Those are sales that they did in the secondary market. They invested slightly more, not much more, I think some 50 million more, but net made it positive by buying equal amount or more in the IPO and QIP basically market. So what does that mean? In big picture, it means that overall they were not negative. Secondly, it means that they wanted to change their portfolio a little bit, because there's still a little bit, because the total AUM of the FIIs will be, say, 800-900 billion dollars. So if you have sold some whatever 20-30 billion here and bought $30 billion of new companies mostly, a large part of that would have gone into these IT, not IT, I mean these new age economy and new companies. That is what we also say, that you should have a small part, or 15%, 20% our case, in these higher growth, newer kind of companies, and reduce your weight in sectors that are now sectors of the past. And one of the biggest sectors of the past is auto. And how do we know that? Simply just look at every auto company in the world, every, and just see its performance for the last 1 year and see how nobody wants it, and how, in Germany, different plants of Volkswagen are fighting with each other that which plant should be shut down. And in Japan, 2 or 3 companies now, including the third company, Mitsubishi, wants to join Honda and Nissan. Where was this thing happening? So anyway, point is, the FIIs are changing their portfolio on the margin. They have not been net negative. They also not been net positive in 24, but they are not that record negative that you talk about. The net number is positive. And that sales have also happened because of some sales, because of Trump and because of his policies. And therefore, we also should take some lesson. Why were those policies considered good for investors, that they wanted to invest money in US? Because they said, we will cut tax rates, we will not increase capital gains tax, we will allow deregulation, we will allow M&A. All these things, if US can do at that size, India should do.
Fair point. Samir sir, when you look at the forthcoming budget, it has an opportunity to reverse this tightening of the economy that you mentioned, and the fact that in the last 6 months or so, a lot of the PSU basket stocks have also corrected sharply. You haven't been a big player on the PSU side as far as purchases are concerned, but how do you see this space? Are there any pockets of hope as far as the budget is concerned, or maybe even 2025 from the public sector utilities point of view?
So actually, we have now quite a few PSUs, like we have State Bank, we have NTPC, you can call Power Grid, or you can call these defense guys a little bit. But the big picture is, no longer are we buying them because they are PSUs. Previously, although we, as you were right, said we didn't really buy them, but when we bought them a little bit in 22 and 23, when the market of PSUs was going up, there was still some logic related to it being a PSU, which means either it was cheap because they are PSUs, they were cheap, or secondly, the government is making some changes on their management, on their board, on maybe trying to privatize them, or trying to privatize, like they tried to privatize BPCL, then there were rumors about privatizing Container Corporation and all that. Now, in general, the PSU basket is not cheap, and the government is not trying to do anything different for them. Therefore, now you have to treat them like regular companies. If regular bank is cheap, we own State Bank. If you say we need something in power because that is where all these AI and everything else will need, or you need some power company, okay, please you choose whatever you want. But now you're not buying them because they are PSUs. That is a big difference, even though We own a few of them, but not because they are PSUs, but they are good companies in those sectors that we wanted rather than the label.
Okay, Samir sir, now it brings me to the question for all those, probably recent investors and first time investors, how do you advise them to go about in 2025 in terms of why? Because you just pointed out that one has to lower down or temper down the expectations in terms of broader returns. We may probably not see returns that we've seen in the recent past. What then is ideal to do as a strategy to create alpha in such a market as well? Will it all depend on the right asset allocation? Will it depend on if you are in the right category in terms of large, mid or small? Will it depend on if you're in the right sectors? What exactly would you advise?
Well, all of them will matter, and but the big picture is for new investors, they have to first understand that, of course, there is asset allocation part, depending on their ability to sleep in the night if the market falls. But secondly, is that equities in general, in the long term, do better than everything else. So if you are a new investor, which basically means you are a young guy, 22, 24, who is getting his first job and saving from his salary, then now the advice is that you should have 1 year of money in your bank account or something for a crisis, or if you lose the job. Now that again depends on each fellow. If his job is really good and he thinks he's not losing it, he can
Yeah.
put more equity. But over time, equity will do better than everything else. And in any case, in the beginning, it is too early for you to think of real estate and gold because the ticket sizes will normally be more. Of course, you can buy a gold ETF or something. But in general, young guy, new guy should have 50, 60, 70% in equities and rest in whatever pleases you.
Right. Sir, what is your peer group talking about Mr. Trump's return in the US? Is he going to be something that the equity markets, general asset classes are going to rejoice? Or do we see the same kind of fractured period coming back in when he was first in power? What is the general consensus on Mr. Trump?
I don't know about the consensus, but I have taken the call that it is a positive for every asset class. So when he won, 2 days later on that Friday, I bought everything myself, which is India, US, gold, China. So why? So I think that China, the fear was and is that he will increase tariffs across the board. I don't think he's increasing tariffs across the board. First of all, he invited President Xi to his inauguration, and secondly, the Treasury Secretary is a ex-hedge fund manager, and in general, Elon Musk has a big business in China. But more than that, it would be illogical to think that you can just randomly increase, because China controls many now vital raw materials for manufacture of mobile phones and EV batteries and all that, and therefore it is not so straightforward that I am putting this tariff, because China can say I'm not giving the following 10 items. These are all deal making is what I'm taking the bet. Second is, let's say they do it on them, then okay, the Chinese market will do badly. But I don't think then they can simultaneously do it on India also. He can't fight with everybody in the world. Third is, in general, the fact is that still, whether he does a good job or a bad job, there will still be more and more government spending, because that deficit reduction is not an easy thing. And many sovereign governments and all who are uncomfortable with US and US dollar are still big buyers of gold, because they don't know what to do with their reserves, including India, because they have seen in the past how US took away in a bad day the FX reserves of Russia and all. So it's a big this thing. So best is buy everything, change your mix. But otherwise, US is a great market, great thing. And in an ideal situation, all will do well, depending on this and that. Some will do better. But basically, I'm bullish on everything.
Okay. My final question to you, Samir sir, on the show would be about one dark horse sector or a stock that you can mention that one should be betting on for 2025.
No, why should we mention stocks? We are mutual fund managers. I am the founder of that mutual fund. It's doing well. Go buy it. That is one fund only you have to buy. Even there, we have 3, 4 funds. You choose whichever one you like. Give out, throw out the old. The old guys have to be replaced by new in everything, including in mutual funds.
Okay.
So Helios Flexi Cap, ladies and gentlemen, is something that you
I am
should be
not saying
looking at
anything. Don't listen.
with a great eye to the future. I'm saying, it's my call. And Samir sir, final question. US 10-year yield now above 4.6, 4.7, plus the fact that we were supposed to cut interest rates somewhere in February or April. How do you explain, one, the rising yield against the backdrop of US cuts? And when do you expect the RBI to sort of give us some relief on EMIs?
So, in US, the last call of the Federal Reserve chairman was a bit confusing because they cut the rate and then said, we think inflation will be higher than what we thought. So then they said, well, why are you cutting the rate now? So it looked that because they had committed that before, they said if we don't do it even now, that would be a very negative and a big disappointment. So they cut the rate, but basically said now we have to be careful. And that day and later, the interest rates in US spiked. And so now that is an issue there. I agree, because the inflation there is not falling to 2, but it's I think come 2.6 or something. But still fine-tuned, and they may have 2 cuts this year. In India, you can say that there is a new RBI governor. He's already, a few things are being changed here and there in terms of at least this conversation on how dollars have been spent in supporting the rupee and all that. And also today that, okay, this policy of 3 loans for MFI customer is being deferred. Somehow think the government is getting sensitive that it was too tight. But I still think that they will not cut interest rates so easily. It'll be too, what is the word? People will think that the RBI governor's job has been, to do this cut. So it won't happen so straightforward. I think there'll be maybe 2 cuts in the year. And first few months it will not be. Then we don't know.
Okay.
Right. Thank you so much for your time, sir. As always, it's been a pleasure listening to you over the last 25, 27 minutes. And we look forward to your continued presence as you have confirmed yourself over the next 1 year. So thank you so much for your time, Samirji. Have a nice one.
I have confirmed if that day the market is up.
Done. 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 We are hopeful that there will be many such days in this year. Done. You will expect our call. Yeah, okay. All right, viewers. Thank you so much for joining in. This was Market Masters, a fantastic start to 2025. And we promise you that throughout the course of this year, we will get you many such lovely interactions with top market masters so that you can get an understanding of how are they really approaching the markets and what's the sense that you can pick up for your own investment portfolios as well. All right. With that, Shell and I bid goodbye on this edition, but we'll be back very soon for the closing edition of Market Today. So stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in the series of year-end special editions which we are consistently getting you from this entire week, you are getting to hear from the top